Well, hello everyone. With the market already poised to buy dollars, a much better than expected U.S. retail sales figure for April boosted sentiment further, and the dollar continued its gains. The retail sales figures, which included an upward revision to February and March, caused brokerage firms generally to upgrade their U.S. GDP forecast for the second quarter by 0.2 or 0.3 percentage points. Some profit-taking came in, though, and the U.S. currency is trading this morning below its levels of Monday morning against several currencies. Now, the point I'd like to examine today is, does stronger growth mean a stronger currency? And the answer is not necessarily. There's no consistent correlation between growth differentials and currency movements with the dollar. In fact, if anything, just looking at Eurodollar has tended to move higher when the U.S. was growing faster than Europe, except, of course, when even that correlation didn't work. People think that a currency is like the stock price of a country, and in the equity market, a company growing faster than its competitors will usually see its stock price rise. But currencies aren't necessarily like that. Nowadays, though, strong growth is going to be reflected in monetary policy. The U.S. is now assumed to be the first of the major countries to reduce its extraordinary measures as policymakers gain confidence in the sustainability of the recovery. By contrast, the first quarter GDP figures due out this week from the Eurozone are likely to show that the region suffered the sixth consecutive quarterly decline in output, the longest since the start of the single currency. And forecasts are for the second and third quarters to show declines too. The head of Italy's central bank, who's also on the ECB board, suggested yesterday in an interview with CNBC television that the ECB could cut its deposit rate below zero. It's this policy differential, not growth differential per se, that's likely to drive the dollar higher. Now, with this emphasis on growth differentials at the moment, we're looking forward to today's release of Eurozone industrial production for March. It's expected to be up a bit to 0.5% month-on-month versus 0.4% month-on-month in February. But it's missed estimates 4 times out of the past 5 months, so I'm not sure I'd bet on it. For Eurodollar, 129.85 may act as support now, with the pair trading around its 50 and 200-day moving averages, which are on the verge of a death cross. Trendline and Bollinger Band support may come in at 129.30, which I'd expect to be the lows for the day. Resistance lies in the 130.55 to 75 area. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.